Good morning and welcome everyone to the webinar. Please give us some minutes for other people to join, then we will start. Thank you. Good morning or good evening, depending on where you are joining us from. You're welcome to Greenlight Planet's first webinar as a part of our solar leadership series on overcoming financial barriers for renewable energy entrepreneurs. So for us to get started today, let me introduce myself. My name is Bernard Olajide. I'm the marketing manager covering the West African region at Greenlight Planet. I will be responsible for hosting the webinar today, and I'm glad to welcome all our speakers and participants on board. With me today is my co-host, Adejoke Oyimbo.
Hey everyone, thank you for joining today's webinar. A big thank you to all our speakers. Today, nearly 600 million people in sub-Saharan Africa still don't have access to grid electricity. And hundreds of millions more live with unreliable connections plagued by frequent blackouts. The majority of these off-grid households are in rural areas and depend on unorganized sectoral occupations like agricultural activities for sustenance or income or both. With so many unavailable power or inability to afford basic lighting and housing appliances, it gets difficult for them to work before and after daylight. Even more, to advance their agricultural practices, they do not have access to energy. To reach these households with affordable and clean energy, entrepreneurs, product manufacturers, distributors, consumer financiers all need tremendous support from larger financial institutions and government initiatives collaboratively to achieve their goal. Why is this necessary, you may ask? The financial sector stands at the grassroots level of every economy for businesses as well as communities, with bold conversations around global energy transition led by the United Nations and sustainable energy for all. We would like to focus on how to overcome others like financial barriers to catalyze every energy transition to the grassroots level. While there are solutions that exist, local communities and small businesses may not always have financial access or may not know how to gain access to it. We hope that this webinar sparks conversations and proves beneficial to those who are new to the industry, to those who wish to grow and contribute to energy access for all in a larger way. So let's dive in. You will have the opportunity to submit text questions to us by typing your questions in the questions pane. So you can look at the bottom of your screen, you'll see a Q&A pane. Kindly type your questions in there. You may also send in your questions at any time during presentation, along with the speaker name. That is, if you have a question you want to address to Segun Adaju, you can type your question and put Segun Adaju there. We will collect all those questions and address them during the Q&A session at the end of today's presentation. Having said all of that, it's time to introduce our first speaker on the panel, Segun Adaju. Segun Adaju, currently the CEO of Consistent Energy Limited, is an international expert in the field of renewable energy and is the current president of Renewable Energy Association of Nigeria, REAN. Segun has been in the forefront of promoting the development and scaling of renewable energy in Nigeria. He was the project manager to the first energy access program in Nigeria, funded by UNDP and implemented by the Bank of Industry. He worked as a consultant with the Ministry of Environment, Department of Climate Change, to develop the sectoral plans for the achievement of nationally determined commitments, NDC for Nigeria, in compliance to the Paris Agreement, of which Nigeria is a signatory. Let's hear his perspective on this topic. With so much excitement, let us welcome Dr. Segun Adaju. Over to you, sir.
Thank you so much, and good morning to everyone. I hope you can hear me clearly.
Yes.
Yes. Okay, so it's a pleasure to be here. Let me just quickly share my screen, and then in a few minutes, just share my thoughts with every one of us. So I will be giving an overarching view of the sector generally in very few minutes, overcoming financial barriers for renewable energy entrepreneurs. I run an energy company, Consistent Energy, and also I'm the president of the Renewable Energy Association of Nigeria. So let me just start this. Adejoke mentioned about 600 million people in sub-Saharan Africa don't have access to energy, and I can tell you over 100 million of that is from Nigeria. And of course, you and I were very familiar with the energy situation. Nigeria has one of the lowest energy per capita per kilowatt hour in sub-Saharan Africa. From the map, the left side. And we're talking about energy access. It cuts across from tier 1 up to tier 5, depending on where you fall in within this threshold. So right from PICO to even grid based. And of course, at the macro level, Nigeria is majorly powered by generators. So we have on the average about 5,000 megawatts that is distributed, and you'll be surprised that almost 4 times of that is self-generated using different kind of generators in Nigeria. And surprisingly, Nigeria has a very good resource. I mean, let's start with solar, for example. Solar power is readily available in any part of Nigeria, even in comparison to other parts of Europe. I do some analysis and compare. For example, Maiduguri to Rajasthan. I've had the opportunity of being to India a few times, and I know they have a similar futures, and I know the kind of energy that India is doing, especially from that region. Now you ask why there are so much opportunities. The market is huge, because there's a huge gap of those who don't have access to electricity. Yes, the resource is also very large. Nigeria has one of the best solar irradiation, any part of sub-Saharan Africa. So why is the uptake challenge? By Arena's statistics, one of the top 3 leading challenges we have is limited access to finance, okay, across the value chain, both from developers, end users, distributors, and the rest. And of course, the second is also the high cost of renewable energy technology solutions. So you find out that the bulk of the challenges revolves around access to finance. That's why we're not seeing as much of the potential as being realized. And for me, how do we, my little experience, starting from the Bank of Industry, over 10, 12 years ago, my experience has seen that if we're going to resolve these issues, if we're going to overcome some of these barriers, number one, what are the business model? What business model are entrepreneurs adopting? Okay, of course, the business model helps us to analyze how we create, deliver, and capture value, both in monetary terms and other indicators. Okay, so let me share with you a few models I've also seen. I've also been a consultant in the green finance world. I've developed some plans from some DFIs in Nigeria on green finance strategies. So a combination of debts, equity, grants, guarantees, even up to crowdfunding. I mean, the result-based financing, for example, the Rural Electrification Agency, carbon credit, these are innovative sources of financing that entrepreneurs can look at to overcome these barriers. And I will share a few experience of myself, both as a consultant, a project manager, and also an entrepreneur. I run Consistent Energy, I remember. So what are the sources of finance? Debts. So commercial banks, development banks, bonds with interest. Most time we say this might not be the starting point for startups, okay? So you might need to probably get to some stage before you're able to access this funding, because there are some terms and conditions that apply to this. Other sources will be equity, capital, in return of share or ownership. So investors can invest in our organization and take some ownership and bring some equity. Venture capital firms, institutional investors. Like I said, I also share my experience running Consistent Energy and how we have been able to some extent, overcome some of these barriers. We're looking at grant funding. A few grants in the system, in the ecosystem in Nigeria. There's All-On, there's USADF, and a few others that is also accessible. Most times, development organizations provide us grant funding, and then there are guarantees that can also help to de-risk businesses of entrepreneurs. I mean, for example, the Development Bank of Nigeria has a company impact guarantee. That is also an opportunity to assess, to create pipelines for entrepreneurs. I know there's a DCA, Direct Credit Authority of the USADF also, that has been applied in Nigeria through a bank called, through EcoBank, and I know maybe some other banks now. I remember when we were in BOI, we tried that pilot also with EcoBank. And then, of course, some government-led programs. A typical example is the Nigerian Electrification Program, where result-based financing, output-based funding can be accessed. The likes of the Solar Power Nigeria, funded by Nigeria through the Central Bank of Nigeria, and then many other market-based opportunities, and particularly consumer finance. I'm happy we have the microfinance bank, Standard Microfinance Bank, here with us. I'm sure there are experiences of banks who have done this, funding energy entrepreneurs through some of these market-based platforms, consumer finance, leasing, and the ESCO model. And of course, the key issue here will be the risk and return, basically risk and return. So investors, financial institutions want to match their risk with their return. So they are interested in risk assessment and the risk control. What are the level of risk? What are the inherent risk? And what are the residual risk? So inherent risk, if you're able to add mitigants to it, what will be the residual risk? A bank like Standard Bank, Standard Microfinance Bank will be interested in this. And of course, the returns. So the higher the risk we hear, the higher should be the return. Okay, so in Nigeria, while I try to start to close, we've seen so many pockets of funding that are available that cuts across the spectrum of the opportunities I've mentioned, right from the GIZ funding, for example, Ruby Tech Solar to develop a mini grid at Gbamu Gbamu, and there are many other funding also under that platform, up to, okay, so that's the development organization, up to the World Bank, the Nigerian Electrification Project, $550 million with REA, Rural Electrification Agency. So we have solar home systems, mini grids, assessing those funding. That's also, that would be a government funding program. And then you have the USAID, that's grants, electrify $30 million, and I think there's the SunRev also, that is also about 73 million, euro in Nigeria to fund manufacturers. There are venture capital firms like Verod, Persistent Energy, of course, I've talked about Olon, and so many others existing in Nigeria that can actually help resolve the barriers of entrepreneurs accessing finance. And this should be put side by side with what Nigerian budgets, Nigerians spend every year, average about 15 billion US dollars just to fuel generators. So that's also a pool of, funding. If you develop a proper business model, you're able to tap into this 15 billion US dollars annually spent on powering generators. For example, my company, we deploy solar power for SMEs, particularly barbers. And we realize most barbers in Nigeria have these small generators. They spend an average of 1,000 naira every day fueling those generators. So we try to, this secretization I'll call now. You try to create some funding around their spending pattern, okay? Deploying solar power, raising financing from organizations, and then allowing this set of customers to pay weekly basis, for example, and then having an inroad into the 15 billion US dollars that Nigerians are already spending. Just, one way of overcoming barrier financing. And I tried to do a search of some credit lines. I've mentioned some of them that exist in Nigeria. I've talked about the SunRev, Bank of Industry, there's a 6 billion naira line, the Stanbic, $100 million, Sterling, 10 billion, FCMB, about $87.5 million to finance several portfolios, including renewables. I've talked about Verod Capital, USADF, Olon, Access Bank issued the first green bond in Nigeria, 15 billion. These are opportunities to overcome these barriers. So let me just close by showing you the opportunities that this can bring. This is Igbobi Orthopedic Hospital, powered by solar, by one of the members of the Renewable Energy Association of Nigeria, Oxano Solar. This is GV project developing mini grids all over the whole place. They are one of the biggest partners to REA today. Of course, small Pico Solar Solutions, Pego, enabled, is also being deployed all over Nigeria. Of course, I must also mention Concern Energy. We partner with Greenlight Planet to deploy a solution. This is the first Baba we powered in Lagos, my Baba, and we've done over 2,000 of them. This is a household. This is a school somewhere in Lekki, moving from the Pico out to, I mentioned energy access across the 5 tiers of, access. So this is a school, standalone solar. This is a mini grid. This is GV. This is Ifeanyi Rajaka. This is a building in Abuja. Now the possibilities, if we're able to overcome those barriers, and the opportunity exists. This is a generator importing plants company somewhere in Ikeja. I'll keep their names. This is a gas station in Lagos. This is one of the cell sites we've powered. So much opportunities, we were able to overcome those barriers. And I can say the opportunities to overcome the barriers exist. For example, Nigerian bureaus, even at the highest level, is looking at standalone solar for some of their facilities. So for me, it's of course the barrier exists, but entrepreneurs are wired to find solutions to barriers that reduces their performance. And of course, this leads to a well-powered system and reduces that number of 600 million sub-Saharan Africans that don't have energy access. Our vision in concern energy is basically to displace 1 million generators by year 2030, using the same business model that I've mentioned. We incorporated 2015 and we started business in 2016. I also say Green Planet is one of our major partners in this vision. Today, we've done over 2 megawatts of combined energy generated. Let me talk a bit about RIAN, because I'm also the president of the Industry Association in Nigeria. The target is to enable energy mix of about 40% by year 2030. So I thank you for your attention. I'll be happy to take questions after now.
Thank you very much, Dr. Adaju, for that insightful presentation. So for me, one of the things I could take from your presentation is there are a lot of opportunities out there for renewable energy entrepreneurs. So what we should be looking at is how do they access these opportunities? So on that note, we'd like to thank Dr. Segun Daju. And also we will be taking a poll, so for each and every one of us to answer. The poll is going to take about 30 seconds for us to answer. Okay, so it seems about 29% of us have participated. We will appreciate if the rest of us can participate. And please ensure you click on submit. We will now be closing the poll shortly, and after which we will share the results. Okay, so seeking financial investment for the business, it's we have about 82%, which we believe that this is what renewable energy entrepreneurs find most challenging. Thank you everyone for participating in the poll. Okay, so for us to take the conversation forward, it's my pleasure to introduce Chineye Anekwe, who is the country business development manager in Sister Nigeria. Chineye has over 8 years of progressive experience in social development intervention, with a focus on last mile off-grid energy access, business development, entrepreneurship, women empowerment, as well as gender mainstreaming. Currently, she is a business development country manager with Solar Sister Nigeria and a foundational member of the African Women Energy Entrepreneurs Framework. Her work spans policy advocacy, capacity building, facilitating access to finance, as well as job creation for women. Please welcome Chineye.
Thank you very much, Bernard, for the introduction. Okay, it's my pleasure to be here with us today and then to take this conversation forward. So I will be sharing my screen shortly with us. Okay, 1 second. I think I can go. Okay. All right, can you see my screen at this point? Can you confirm that you can see my screen at this point? Can you see my screen at this point?
Yes, Chineke.
Can you hear me at all? Okay.
Yes.
All right. So thank you very much for having me. So I'll be taking the conversation further from where Mr. Shegun stopped. So Mr. Shegun has given us an overview of what the energy situation in Nigeria is, and then he has also been able to give us the different sources of finance for entrepreneurs. I would want to skip all those and then move further into another aspect of this. All right, so for me, I always think that business capital or financing a business, the money for businesses is the oxygen of a business that thrives where the correct structure is in place and then opportunities are properly harnessed. So you will hear Mr. Shegun mentioning lots and lots of interventions that they have done, lots and lots of opportunities that they are aware of, and then lots and lots of opportunities that they have keyed into. All these things just don't happen in a vacuum when someone starts a business. There are some other things that facilitate this, and then for the opportunities to be properly harnessed so that the oxygen that fuels the business, which is money, can flow in, and then the business will continue running. My focus will be on women. I work for Solar Sister Nigeria, and then I am a gender expert. So I would want to discuss some of the financial barriers as it affects women entrepreneurs. As a form of introduction, just as I said earlier, business capital is really beyond money. It's a plethora of other good business practices. I'll give us an example. So I know I work with a lot of MSMEs that are women. In Nigeria, we work with over 3,000 of them, 3,000 women energy entrepreneurs in Nigeria. And over time, I've been able to discover that the money are out there. You see all this money that Mr. Shegun all the money that he was listing, they are all out there, but they are really not accessible to many energy entrepreneurs, especially women. What's the problem? There are a lot of good business practices that are not in place. Some people don't have good record keeping. Some people don't have good networking skills to network in the industry, to know what is available. Some people don't have good business plan. Like when there is a call for all these grants, you are not really able to present the basic requirements that are needed for these grants. That's if you're even aware of it in the first place. And then eventually you think that, oh, this money is the only consistent energy that should be accessing it. It's the only Solar Sister that this kind of money is meant for. No, there are definitely some good business practices that some entrepreneurs are omitting. And permit me to say that the energy space, especially in Nigeria, we have some good big players in the space, like some big entrepreneurs, but majority of the entrepreneurs are still at the micro and small enterprises phase. And this is the major challenge that is causing financial barriers for these energy entrepreneurs. Some people don't have good bookkeeping skills or good accounting skills. There's no financial statements at the end of the year. All these people that are giving out grant, giving out loan, giving out debt and equity, they want to look at these records before you are able to access any money from them. However, access to finance is still a need, it's still a needle, in the eye of women energy entrepreneurs. This is still a very huge challenge for women entrepreneurs. A lot of women, in fact, when you come to not having good business practices, when you trickle it down a bit, you find out that a few women still fell into this category, and for other reasons out there, women entrepreneurs are still not able to access finance. And then also there's minimal financial inclusion, leading to unequitable access conditions. So what do I mean by this? So you find some of these grants, some of this money out there, but the conditions are just they're just too steep that women entrepreneurs are not able to fit in. So you see things like green collateral, some people will say land, and you know, of course, in this part of the world where I come from, that's in Nigeria, women don't really own lands in Nigeria. And I will give us a typical example. There's one of the women entrepreneurs we work with in Kaduna, and then when we were interviewing her, she said she went to a bank to access loan. And then the bank said she must bring a salary account. Now, for crying out loud, this is an entrepreneur. This is not a salary earner. So how do you expect her to bring a salary account before she's able to access finance? And then a whole lot of other situations out there that are impeding women entrepreneurs from accessing the grants and then the loans that are out there. Another financial challenge for energy entrepreneurs are high taxes. So like somebody that's importing solar product, you pay tax on solar panel, you pay tax on battery, you pay tax on inverter. So by the time you combine all your tax, you're not even sure of how much tax you're paying and how much profit is the person making. And by the time there's an opportunity for by the time there's an opportunity to access a grant or funding out there, they're going to request for this tax record. And this person is not able to meet up. Now, for the ones that are able to meet up, probably they've exhausted the money they should be using to run businesses to fix all these high taxes. And then finally is the, sorry. Okay. So finally is the limited number of, trying to pull this thing up. I can really see my slide well. Okay, finally is the limited number of women entrepreneurs role model in the space. Over the years, there has been some very great improvements as regards to this, but that's still very limited. A lot of women, we still have a lot of women that want to come into the space as entrepreneurs, but there are still very limited number of role models as women entrepreneurs that they can look up to. And these are some of the barriers that impede these women from really thriving in the space. So I'm going to share with us a little bit of how Solar Sister model is supporting women energy entrepreneurs in Nigeria. So Solar Sister is a women-led, it's also a women-driven social enterprise supporting women entrepreneurs to bring clean energy access to underserved communities in sub-Saharan Africa. So we actually operate in Nigeria, we operate in Tanzania, we are scaling into Kenya, we've operated in Uganda. So what we do is gather these women that are interested in building clean energy businesses, and then start trying to address some of these barriers that I have listed already. So one of the barriers that we start addressing is ensuring that these women are having good business practices. Okay, so that when these opportunities are out there, they are really able to have a structured business plan. They have their records correct, and then they are able to compete in the application of this money or this grant or these loans when they are announced. Another thing that we do is we also support these women to develop to also have good networking space. So just as I said, we have about 3,000 of them in Nigeria, and then we group them into what we call sisterhood groups. So what does that mean? That there's a group of women entrepreneurs that are also doing clean energy business. So they network among themselves, and they are also able to share opportunities. So nobody is really doing business. Nobody is doing business as an island. Then another thing is, you recall when Dr. Shegun was also mentioning RIAN, Renewable Energy Association of Nigeria. One has to belong to some of those networks, because those are places that you get to know opportunities that ordinarily you are not able to know. This is one of the things that Solar Sister does for women entrepreneurs. We also facilitate access to finance, which I'm also going to tell us a little bit of what we have done concerning access to finance so far. So the women we are supporting in all over the world, that's all over sub-Saharan Africa. To date, they have been able to reach over 2 million users with clean energy in the last mile, and servicing the last mile is one of the most difficult niche for entrepreneurs, to be able to access money, but we've been able to work with these women to ensure that they are having their businesses running smoothly and sustainably. Okay, so I'm going to take us through a few of our interventions so far. So one of our interventions is what we call voluntary savings and loans group. Can you see my screen very well? Okay. I need to move this. Okay. So voluntary savings and loans group. So what does that mean? When Mr. Shegun was giving his presentation, you discover that some businesses will have to start from gift donations from family and friends. Some of them will have to come from your personal capital. So because we have discovered that a lot of women are really having difficulties accessing finance, Solar Sister set up this intervention called this VSL and A. And what that means is we get these women entrepreneurs in their clusters, just as you can see a typical picture here, and then set up a structure where they are able to make monthly contributions, either the money they got from donations from family and friends, they make monthly contributions, and then they are able to borrow money from that their purse. And I promise you there's a lot of money in that their purse at the end of each month. So they rotate getting money from that purse, and that way they're not able to deal with the high, I didn't even mention high interest rate when we are going to collect money from banks. They are able to escape that. They are able to escape the bureaucratic process that excludes women from accessing accessing loans, and they are really able to coordinate this VSLA among themselves, and of course moving their businesses to the next level. That's we have it across the nation. We've set up this group across the nation. Another intervention I'm going to take us through as I begin to wrap up quickly is what we call the Business Booster program. These are very recent program that we are running with our entrepreneurs. So this is a program that is all encompassing to address all the barriers that a typical woman energy entrepreneur is facing. So in this program, we identified some gaps like capacity building gaps, and then we had to develop some modules to build the capacities of these women. So these modules cuts across financial literacy, cuts across developing a solid business plan, cuts across agency, because one of the challenges that women entrepreneurs are having in the space is that some women feel that they are not enough. We live in a highly patriarchal society where women always feel that you need a validation in order to really be what you have purposed in your heart that you're supposed to be. But some of these trainings are able to like support these women to build their agency, to know that they are really enough to take up this business, to take up the businesses and also thrive in those businesses. And then through the Business Booster program, we're also able to train them on how to access grants. I think the recent grants that one of our SSEs accessed is the Shine Campaign grant, which is really a very huge one for that local woman entrepreneur. And it's as a result of the trainings that they got from this Business Booster program. And then a lot of our SSEs, a lot of our entrepreneurs, we call them SSEs, that's Solar Sister entrepreneurs. A lot of the entrepreneurs that we mentor have also been able to access several grants at different scales. And they've also, and as a result of that, they've actually been recognized a lot in the industry, because they are really coming up to really building a real business and a real energy business. And then one of the things that our Business Booster program is also doing, most importantly, is to provide women with access to credit facility. So within Solar Sister structure, we provided credit facility for the women entrepreneurs that we are mentoring. So this is a credit facility where that it's with zero interest, but we also provide the training that will support these women in order to ensure that they utilize the credit that they receive in order to put it in their business and then make it to really be viable, and that way they are also managing this in-country, this in-organization grant or this in-organization loan, they are also able to build their capacity to explore other opportunities that are out there. That is why I mentioned that networking opportunity is very important. And that's why one of the values that we uphold so much as Solar Sister is what we call sisterhood. So that sisterhood is a supporting system. That sisterhood is a networking opportunity. That sisterhood is a business training ground for these women. And that is one of the things that has accounted for the success of the women entrepreneurs that we are working with. So what's my advice to women entrepreneurs or aspiring people that are aspiring women that want to become entrepreneurs in the energy space? You just need to get your business practices right. Join a network that will help you to get those business practices right. That is the only way you can really compete. And let me also inform you that this is a highly male-dominated space. So if you don't really get some of these things right, you won't be able to compete. So network properly, come out of your shelf, network properly with people that are already in the space, attend meetings, attend conferences, so that you are really able to compete in the space properly, and then you'll be successful. We have a lot of successful women energy entrepreneurs in the space, and I know Mr. Shegun can actually attest to that. Yeah, so that is that from me, and I just want to say thank you very much for listening to me, and I'm very glad to take further questions when the time comes. Thank you very much.
Thank you so much, Chinenye. That was very, very insightful. You said something, you said for people to have access to so many grants and funding are going on around the world, you need to get your business practices right. And you also made mention of the fact that a lot of bookkeeping has to go into this. You need to get your account, your accounts right, get your financial statement so that when the opportunities come up, you are ready. Thank you so much for that. Now it's time for another poll. We'll be launching another poll. I'm sure we can see the poll by now. Yes, I can see some answers coming in already. We have about 2% of participants that have answered the poll. Please, let's keep our answers coming. What is the most important factor that influences investors to plan investment in renewable energy? Let's keep our answers coming. We're going to round up the poll shortly. Let's have more answers. We have about 30% of participants who have answered. Remember to click submit once you put in your answer. Yes, I think we can end the poll now. Okay, so the highest goes to company and industry performance in terms of asset quality. We have about 33% of us choosing that as our answer. All right, to delve deeper into what are the best measures entrepreneurs can opt for while seeking investment, we have Krishna Swarup. We have Krishna Swarup, Chief Financial Officer at Greenlight Planet, taking over for the next 10 minutes. Krishna Swarup is the Global Chief Financial Officer for Greenlight Planet. He has over 18 years of experience in finance and strategy. He has led more than 7 acquisitions and restructurings. He has also been able to raise over $600 million till date, including $100 million plus with Greenlight Planet over the last 1 year. He has worked with international advisory firms like PwC and KPMG and large industrial conglomerates, ranging from a large public utility, Indian Railways, to multinational consulting firms, to extremely large manufacturing groups in his career so far. Join me as we welcome to speak Krishna Swaro.
Thank you, Arijoke, and good morning, good afternoon to everyone who have joined this webinar. I'm glad to have joined this, and I thank the organizers for giving this opportunity to present. What I'm going to talk now is probably building on what Dr. Segun and Chinaya already shared about what are the barriers for energy entrepreneurs, as well as how can we, what are the sources of financing, as well as what is something that the investor would want to look at. And of course, at the end, I'll also slightly touch upon, as Greenlight, how can we support some of those initiatives or those funding options. So, as Dr. Segun had already mentioned, typically when we talk about finances for any entrepreneur, including a renewable energy entrepreneur, there are only three sources, right? You either have equity, you have debt, or you have grants. Now, between these three categories, there are different sources, different combinations. And so when we dwell upon each of these segments, when you look at equity, where do we get equity for the business from? Almost all the entrepreneurs who start their business would have started from their personal investment, personal savings. So that is your first call for capital, or the first source of capital. And typically, most of these entrepreneurs, again, this is true for every entrepreneur, every industry, you would start from your own resources, own savings, probably fund your business for the first probably 1 or 2 years, and then you start looking for outside finances. This is how it would typically happen to most of the entrepreneurs. The next source, once you exhaust your personal savings and investments, would be a social circle. I'm sure a lot of entrepreneurs would then reach out to their family members, friends, professional acquaintances to co-invest with them in the business. And that becomes your second channel of sourcing, or the second point of equity capital for the business. And for the record, Greenlight also has grown like this. It has started with the founders' personal investments. Then the next round came in from social circle from their peers, their friends, their mentors, and people they knew around. And this is exactly how probably almost all the businesses grow. After you cross this personal financing kind of level, when your business is growing, then you enter a stage, something called a seed funding and angel investments. Now, again, for seed funding, you have specialized investors or investors who do very, very early stage funding. These are, as the name suggests, are almost like seed. They are very early capital. Of course, a lot of seed funding also happens on an individual basis, again, from your expanded circle. It may not be your immediate family or friends, but somebody that a friend of your friend might know. Yeah. So that's the third source. Now, once your business grows beyond this stage, typically when you start your commercial operations, you have moved beyond the concept stage, you have moved beyond the pilot stage, is when you start reaching out to venture capital firms or venture capital investors. So these guys typically invest in businesses which are already approaching commercialization, already approaching sales, but they are far short of profitability or far short of a cash positivity. So these are venture capital firms. Again, there are many venture capital firms which are keen to invest in the renewable energy space in Nigeria as well. Of course, this venture capital investments are typically again in your early stage of business. They will not support you when you have attained a certain scale and a certain speed in growth. After venture capital comes the stage of private equity investors and impact investors, and these are large investors. When I say large, of course, impact investors who do different forms of funding. They also do a debt as well as equity, You will find impact investors who will do right from $500,000 all the way to hundreds of $1 million in terms of funding. Again, both private equity investors who have focus on sustainability and environmental climate change funding and impact investors will come in only when your business has achieved a certain scale. It means that you have done your commercial operations for probably 6 months to 12 months or probably a couple of years. You have a consistent track record. Again, when I say consistent track record, it does not mean profitability. I will explain that as we move into the next slide. But what would a private equity or impact investor would look at is some track record of you performing on your business plan, whether it in terms of expansion, in terms of sales, but not necessarily profitability. Yeah, I'm making it clear again and again. Profitability is important, but it doesn't mean that you will get funding only once you become profitable. Yes. So this is equity capital. And remember, world over, there is a renewed interest in renewable energy businesses. There is a lot of funding that is coming around across the world, especially into Africa and as well into Nigeria. As Dr. Segun had earlier mentioned, World Bank and AFDB are have already implementing a grant program for Nigerian electrification of about more than $500 million. So they support businesses from those funds. They support result-based grants from that pool, and there are a lot of other interventions and programs that they do. So these are different sources of equity capital for a renewable energy business. Now coming to the second part of this, and this is really important more at the earlier stages of business where you need something which is patient and which can come with a low cost of funding, and those are grants and government funding sources. Yeah, these are this is by nature patient in the sense that they don't come with any tenure for repayment or tenure for performance, and two, they are low cost in the sense they are cheaper than a debt, they are cheaper than equity, but the disadvantage is that they are complex to access. They would have a lot of requirements as to how you have to present, how you are eligible and things like that, and that is what will take time to access these funds. But again, these are there. For example, again, the World Bank funded National Electrification Program. The World Bank funding is here $200 million, and you have AFDB also joining the program. I think this program is now about $500 million in terms of funding pool. Then you have Bank of Industry of Nigeria, which has a solar energy fund of around 6 billion naira, and you have Central Bank of Nigeria Solar Connection Intervention Fund of around 500 billion naira. So these are three big pools of funds that are available to solar energy entrepreneurs, which they can access. And these are largely government supported or multilateral institution with multilateral institution support like World Bank and AFDB. The third segment of capital sources are largely debt capital, and debt, as we all know, is an obligation to repay. So you will have, they will come in and they can be sizable in terms of funding opportunity, but they come with an expectation of a return, which means your business has to perform at a certain level once you start taking debt. So till there is viability that we can demonstrate in the business, it is advisable to look at equity and grants as sources of funding rather than looking at debt, because debt creates a repayment obligation and an explicit cost of funding. Grants and equity have implicit cost of funding. What does it mean? That you don't need to service them or repay them in a predefined manner with interest or something, but debt has a regular interest outflow and has a repayment obligation. So there's an explicit cost associated with that. And the main sources of debt here are obviously commercial banks. Many Nigerian banks are also moving into sustainability funding, and they want to help fund these. Again, many of these banks' commitments, both international banks and local banks' commitments, are coming from the global push for sustainability funding and climate change funding. I don't know how many of the participants are following, but this COP26 session that was concluded 2 months back in UK, where almost all the governments in the world have committed to follow or to implement measures to mitigate climate change. The funding commitments in that seminar from all the countries put together is $130 billion. And one estimate is that of that $130 billion, close to 25% would be flowing into Africa. So there is sizable investments, sizable chunks of funds that are coming in, and a large part will come through this channel, which is debt. And commercial banks would be leading some part of it, a large part of it, and especially when the business is slightly early stage, in the sense where commercial banks have still not found enough confidence to fund a business, you will have a lot of multilateral institutions and development financial institutions, which will participate. Again, their funding ranges all the way from $200,000 to $100 million. You have many institutions like CDC, FMO, North Fund, IFU, IFC, the DFC of the US government, and all those things. These are multilateral institutions which are working in Nigeria and funding solar energy entrepreneurs. The third segment would be impact investors. There are a lot of private investment firms which focus on social impact investments, including renewable energy. We partner with a lot of them, including SEMA, Symbiotics, Responsibility, and so on. And we have one from SEMA Funds who will also speak in this session and explain what they will be doing. So impact investors are also, again, very critical in establishing funding for this business, especially when we are still a little distance away from achieving commercial funding from banks. The last is crowdfunding platforms. Again, you have many platforms where you can put up your business for funding, whether it's for equity or for debt, largely for debt. Most of these crowdfunding platforms do largely for debt. And they're, again, small sources of capital. They don't do the size that you can expect from these platforms is limited, from 100,000 maybe to 1 million or 2 million, but anything above that will be difficult for a crowdfunding platform. So these are the three different categories of capital that a renewable energy business, or in fact any business, could access. And you would often come across a term called mezzanine financing, which is nothing but a hybrid form. It includes elements of both equity and debt. Example, it could be a convertible debt, which is given as a debt, but then converts into equity after achieving or non-achievement of some objectives. Most of the investors who can do debt, or they can do or equity, would also do mezzanine financing. That's on the different sources of funding. But how do we access that? What are the 3 or 4 critical points that are important to take any business to a funding stage? First point, profitability is the key. Now, again, I clarify this. When I say profitability is the key, it doesn't mean you have to become profitable to get funding. Of course, you need to have a path to profitability. You need not be profitable today, but when you present your business case, you need to have a visibility or an estimation or a game plan to show that, look, these are 5 things I need to achieve. I expect to achieve this in 2 years, 3 years, 5 years. And this is how the profitability, we will move from this negative profitability to positive profitability. These are the expected margins over this period of time. That is the most critical part when you present your business plan. Repeating again, you don't need to be immediately profitable, but you need to have clarity and a path to profitability that you can articulate. Unless you build conviction on this journey, the rest of any conversation would not move forward with any funder, whether it is equity, whether it is debt, whether it is grants. Yeah. The next one is cash flow. Again, you could be profitable, but you could still not be earning cash. Yeah. And that is a really important problem for many renewable energy businesses. And it is also important, especially when you do something like pay-as-you-go business. You might be having profit when you sell a product, but you're locking your capital for 1 or 2 years with your customers. And that means that you are burning cash even when you're, so every time you sell more, you end up burning cash more. So the second important point, after you can demonstrate a path to profitability, is also a path to cash positivity. So you should be clear, again, where you can map it down to milestones on what you can do to make your business cash positive. Unless you can demonstrate this, equity is still possible for an investment, but debt is a no-go. Because imagine this, if a bank or an investor wants to give you debt, but you cannot demonstrate when will you earn cash from your business to pay it back, how will a bank lend it to you? How would an investor put money for you? So cash is king for any business, including for renewable energy business. Again, need not be cash positive today when you're presenting your business case, but have clarity and a path on how and when can you achieve that. What needs to happen in year 1, in year 2, in year 3, in year 4 to achieve that positivity. And structure your debt, your investments around that cash flow plan. If you think in your business plan you will achieve cash flow positivity in 4 years' time, and you agree for a 2-year debt, you're setting up for failure. Right? So think about this business plan on profitability, on cash flow, and then try to match them together. Third most important point, and I think Chinaya has already mentioned this in her presentation, is invest in processes. Having a good business idea is fundamental. Having a good product is fundamental. But equally fundamental and important for a business is investing in process. If you do not know how much you are selling, how much you are earning, where you have sold, who needs to pay you, then what confidence will you give it to your investor that the cash he will invest with you is safe, is well accounted for? So typically when businesses are growing, it might look like a avoidable expenditure investing in processes, but trust me, it is not. It is critical to invest in reporting, in risk analysis, in support processes, so that you have confidence in your business and you can project that confidence to an external investor. The last one is preparation. Prepare a good business plan, prepare a good pitch deck, do shadow runs, mock runs with your co-investors, with your existing partners, with your friends, with your mentors, whoever you can find. Every time you sell a product to your customer, you're demonstrating your product, right? Imagine your investor as a customer. You're selling your business to him. You're selling your business idea to him. I'm sure every entrepreneur does a lot of work before going to meet a customer to selling his product. And so when you're selling your business for an investment, you need to prepare 100 times more than that. So there is no substitute for good preparation and preparing a good business plan and a pitch deck. And the last part of it, as Greenlight, what do we do and how do we support our partners? The first one is we partner with our investors to provide distributor financing to our smaller partners, right? So for example, we partner with SEMA funds where we make introductions for our partners with SEMA and a couple of other impact investment firms for a distributor financing program. And SEMA does a credit analysis and funds that partner, and we provide a funded guarantee or a margin for that loan. So we stand guarantee for a small portion of that loan. This way, we help in providing business contacts. We help navigate the process between the partner and the lender, and we provide some margin money or a margin guarantee. That is what we do as Greenlight to help our partners in scaling up their businesses. 2, we also offer credit terms to typically large and long-term customers. A lot of you might have a question that does every customer get a credit right on day one? The answer is obviously no. But for our long-term customers who have demonstrated a healthy performance or or a history track record, we do offer credit terms and which are tailored to their business and their needs. The last one is that we are able to work with multiple currencies and multiple instruments. For example, when we partner with somebody from customers from Ethiopia who currently are facing problems in getting forex to pay for the goods, we also work with local institutions, local LC providers, where we can we are pretty flexible and where we can get the payment solutions implemented. Again, we handhold our customers in navigating this process and getting that into place. So that's all from my end. Thank you once again for this opportunity, and I'm happy to take the questions at the appropriate time. Thank you.
Thank you so much, Krishna, for that wonderful presentation. I think for me, one of the takeouts of this presentation is I like the way you broke down those categories broke down the categories, and also I like your pointers, which you made mention. Out of those pointers, the first one, which was profitability is key. I think that goes for every business, and I like the fact that you explained that you don't have to be profitable at the first month, but definitely have a plan for profitability. Thank you so much, Krishna. So I present to you our fourth speaker, Amitesh, from a partner at SMEs France. So Amitesh has 16 years of experience and was identified among the top 20 CFOs in India for continued commitment to excellence, and has also received the Global Achievers Award from India Achievers Forum in 2021. He is a partner at SMEs Fund, where he co-leads 2 solar funds. He also leads advisory parties. Amitesh has a proven track record of leadership roles and of the solar industry. He has previously served as a global CFO of one of the largest solar pay-as-you-go companies. Amitesh has globally accepted degrees such as the CPA from Main Board in the United States and ACA and ACS from India. He has also served as India Finance Head for LinkedIn and has previously held finance leadership roles at GE Energy and KPMG. Please welcome Amitesh Singh.
Yeah, thanks so much, Bernard, for that kind introduction. And welcome everyone to this webinar. I think we are discussing one of the most important topics in the industry. And as we kicked off the session, Dr. Segun mentioned about how important it is a financing structure or a finance accessibility to the young entrepreneurs to start building their operations. And I think the way Krishna has put up in terms of, the journey of finance, when you do the family and friends, seed financing, Series A, and so on and so forth, I think that is so much relevant. Now, I wanted to talk a little different in terms of connecting it, what you're doing on your day-to-day basis, of how you can become more investment ready. So at SEMA, we believe that there's a lot of funding which is available for young entrepreneurs. And I think one of the questions where, it was very interesting that what would an investor look for? And I think, I was trying to answer that question. And when I did that, it says that the host or panelist cannot do that. But I was actually hitting the same answer which all of you did. I think it was 33%, where we are looking for the portfolio quality of the asset. Look, at the end of the day, where we are moving with solar distribution company, even with mini grids or even with commercial industrial solar coming to a home and ecosystem, which is mostly running on a machine called pay as you go. There were days when the systems were sold on a cash basis, but no longer. If you want to scale up, both in terms of volume and in terms of enhancing the product, I would say technology, pay as you go is the way to do it. So what I wanted to talk about, and these are some of the learnings which we had at SEMA, and where we rate our companies when we do the underwriting, when we build our pipeline. These are the 5 things which we look in a company which are very important for us to make a decision whether we invest in these companies or not. And being in the solar industry for past 8-9 years, looking at them closely, I think I've tried to kind of correlate it with your regular day-to-day business as to what you're doing. Okay, Krishna and Chinaya touched upon in terms of the path to profitability, unit economics, and making the business sustainable. So I think it is the most important factor where you set things right at the very beginning, whether you are selling 1 unit or whether you are selling 100,000 units, your unit economics has to be very tight. So I'll come to the unit economics in a bit, but I think that the 5 major or the 5 factors, very important for any investors, and be it a commercial investor, be it a social investors like us, impact investor like us, or a grantor. Even nowadays, I have raised about more than 15 million of grants in my life in terms of when I was doing the pay-as-you-go business. The most important factor there is even the grantors require scalability. If you're not showing them the path of profitability, how their money is being used to scale up the business, so the soft money should not be treated as it's money to be utilized just to infuse it in your business, but it should be seen what ROI even the soft money is giving. So now the first thing is asset and liability mismatch. I think this is something which all of the business, especially the smaller ones who are transitioning from being a trader or a distributor to a pay-as-you-go company, miss this. So there are several ways you can raise the finance. It could be equity, or starting from, let me go to that next slide. So starting from grants, which is a soft capital, then growth capital, which could be, a venture debt or a venture equity. Then you raise it up to corporate debt with more equity, Series A, Series B and all, and structured debt. So I think we need to understand the nature of the business. Like when most of the solar entrepreneurs and the solar business, specifically in Nigeria, whether it be CNI solar, mini grids, or pay-as-you-go business for home and Pico systems, what has become most important is, apart from being a trading company, we are transforming, these companies are actually transforming into a financing companies. And it's very important for the companies to understand that when you do that shift, you not only do that shift in your operations, but how you do things in terms of structuring your finances also becomes very important. Grant monies could be utilized to get into a new product, new segment, or a new geography basis what the grantor thesis is in terms of their soft money. Now, growth capital could be opening up a new country in terms of operations or geography within the country. Now, corporate debt is a mixture where you can utilize it for working capital, or you can utilize it for OPEX, etc. But now comes the structured debt. This has become much more important when it comes to pay-as-you-go. Is you raise money for your receivables. So the point which I'm trying to make is, look at in which stage of the business you are. What is the nature of the business? Are you a trading company? Are you a distribution company, manufacturing company? If I have to break down these categories, then you need to find a right set of capital for. I think that is very, very important for all businesses at any scale you do. If just to give you an example of what structured debt is, if you are giving your product on pay-as-you-go business, there is a huge receivables which start piling in on your balance sheet. Now, and at an ideal scale, that pool of receivable should be parked somewhere in an SPV or in a different structure, and you raise funds for that portfolio. And again, you have to see what scale you are. I talk about SPV and all, it could be a little complicated, it can be expensive, but all I'm saying is you need to learn what's going on your balance sheet and start funding for those kind of assets. So that was point number 1, I think, and this is very essential. Even if you raise grants, everyone will look for scalability. Now, this is an example which I wanted to present to you, is why and unit economics is important. Unit economics is important because, if you're not setting it right on day one, that whether you are selling 10 units a month or whether you are selling 100,000 unit a month, unit economics is very important. And being an investor, we have seen some good companies who do not have set unit economies has failed to scale up. I think that has been a problem with many companies in the region. And if you see this breakdown of what we have is, the revenue, the COGS, the selling margin, the distribution costs, etc. Everything needs to tied up to what revenue you are achieving and what percentage of cost you want to allocate. There could be certain limitations on the cost side of things when you're running operations in different countries. But if you see in company X and company Y, company X, despite of earning a higher gross margin, which shows that their production or their sourcing is better off than company Y, but ultimately they are making a loss. And why is that? Because if you see the head Q cost, the HQ cost, which is basically your headquarter cost, which gets allocated, which means either there are too much fixed cost or there are too many expensive resources which has been hired at an HQ level, or a company operating in Nigeria or Kenya or Abidjan has a headquarter in Germany or London, where the HQ cost is very high. And we have seen those kind of examples. And that what it leads to is a negative profit and a negative unit economics. So setting it right, and this is what we look for, this is what it was, this and the asset quality is what we look for in a company. So I think setting this right for all the smaller companies is even more important now, especially given pay as you go and its complexity of breaking down the cost and understanding the cost. Now, moving into the next topic, which I have already touched upon, is you're actually moving from being a trading company to a financing company when you're doing pay as you go. And most of us if you have to scale up, a pay as you go and a financing structure has to be brought in, because nobody is going to buy a $500 system, or you can't set up a mini grid without you're setting the right economics for financing. So you need to start thinking like a financing company. Internal structuring is required, both from human resources side of things and the other IT side of things. The reporting has to be very important. Like just to give you an example, if you are trading in a distribution company, EBITDA number is what we look for, okay? And it depicts the quality of the business in terms of profitability. Now, if I have to see a pay-as-you-go company, EBITDA is no longer a number, because interest cost for these companies are operational, is required, because financing is another raw material to run the business. So those kind of changes, especially now talking about the portfolio, we're emphasizing so much on the portfolio quality. So portfolio quality also becomes so very important. So your internal and external reporting around that has to be very robust, not only for the investors, but for yourself. If there is a delinquency in certain geographies or certain sectors or certain products, you need to handle it with your reporting. And to do that, you need to have systems, data, human resources to manage it, and new tools. So I think that is the gradual progression when you have to adopt to a pay-as-you-go business. And it is important. So I'm just trying to connect the dot between I being an investor and how I have seen being an operator. So what I've done is I've just tried to connect that dot as to what an investor will look for and what as a businesses you can achieve by doing this, and how you can attract more investments. This is very pertinent for all of us, especially given the macroeconomic situations in Nigeria and various other countries in Africa. It's not only in Nigeria, but many people have been struggling with forex regulations around it, the repatriation problems which we have, and all that. So I think local currency financing becomes even more important because it cut down on your hedging cost. You have much more negotiation power with the local banks than you will have with somebody as a foreign lender. Or even if you have accessible to foreign lenders, you should always do a matching currency financing, hedge your US dollar exposures. And if you're able to raise money locally, or we have a very unique proposition of financing in Nigeria. We have heavily invested in Nigeria, and we believe it's going to be the biggest market for renewable in next 5 years. The market study shows that the whole of Nigeria could be bigger than whole of East Africa. So that big the market is Nigeria for us, and we are very heavily invested in Nigeria. So we have a very unique proposition as to how we are providing the local currency financing. Is we are tying up with local banks. Like we have a tie-up with Zenith Bank. We have a tie-up with First Bank of Nigeria, and we do back-to-back financing with them. We do dollar deposits, and they help us do the local currency financing. So even the small businesses need to understand, of course, capital is important. Sometimes the expensive foreign capital may attract, but look at your balance sheet, look at what your assets, what you're earning in, and try to match it with your financing. So I think that becomes very important. Again, this is for the operators where you are thinking that, what investors have to look, it's just only about the balance sheet, it's only about the portfolio quality or the currency. But I think one thing which will change even the perception of the investors is technology, is your customer service. These are all our due diligence questions when we asked in terms of the product quality or how the companies are servicing customers, not only from the financing or the product quality of the side, but after sales as well. And innovation. So the solar industry has evolved so much in past 10 years and is evolving. I think innovation is going to be the key. And we have, if we have to just talk about the cost and how innovation has helped bring efficiency in the cost, the solar PV panels are approximately 80 to 85% cheaper of what it was in 2010. So in that 12 years, you can see how much effort in the innovation has gone in. And I think I urge every small business to come up with innovations, not only in your product, but the way you do business, the way you collect money, the way you distribute your last mile logistics and things like that. So innovation is very important. Now coming to SEMA specifically, SEMA funds was started in 2016. As of today, we have an AUM of around $200 million. Our thesis on investment has largely been around energy access and financial inclusion as well, which supports energy access. So even when we invest in MFI, we make sure that they are doing some sort of a solar loans. Our fund one, I think Krishna did speak about the distributor financing bit of it. So with fund one, we did some innovations around the financing. Even with the financing, you have to be innovative. You can put certain guarantee structures to fund small distributor in partnership with larger manufacturers like Greenlight Planet. And we have done that, and we are scaling it even further. Another important fund which we brought last year was the Energy Access Relief Fund. It addresses the liquidity issues created because of the pandemic and the other risk which has brought in terms of the supply chain, in terms of the further accessibility of the capital. As of today, we have invested in more than 30 countries, 30 companies, and the target is we invest in more than 100 companies. So now you can see that the size of the fund is 84 million, but we are targeting we invest in 100 plus companies. So we are doing small loans. And why we do small loans is to support the small businesses in the renewable and energy side of things. Now, DFF, which is a distributor financing fund, it is done in partnership with a software platform called Angaza, where it is a data-driven fund where we collect the data from the Angaza platform for the portfolio quality, and we do some presumptive analysis to come up with an underwriting of these companies. So the idea is through this fund, right now it is in a pilot phase. We have just done 3 million with 10 companies, but the target is we scale this up to 15, 20 million and do 80 plus companies, small loans. And this will also lead us to a new different world of underwriting where the underwriting also becomes automated based on the data which we collect. So I think these are the some of the innovative things which SEMA is doing. And since I mentioned that EARF is we are scaling, right now we have done 30 companies, but the target is 100 plus. So what we are going to do after this webinar is SEMA Fund is actively seeking more innovative companies with path to profitability, but they have a good operations. So I would be more than happy to evaluate the companies who are right now on this platform. So we will provide you details after this so that we can get connected and we can evaluate your business and see if the Energy Access Relief Fund fits into your structure and we can help you finance that. So with this, I would like to wrap up my session, but I thank everyone and thank Greenlight offering me this time to present SEMA and talk about some of my experiences. So, and I wish all of you a very good future in terms of renewable. I think that is where a bulk of, it's not only about providing access to electricity. I think this is going to scale up and this business is going to bring a lot of, not only the changes which are tangible, but it's also about behavioral changes in ourselves to make the world even more better. So I thank everyone for joining and look forward to interacting again. Thank you.
Thank you so much, Amitesh, for that insightful session. A few things you said that stuck with me. You said setting unit economics right and asset quality is very important to investors. That means for us to have access to funding, we need to get unit economics right. You also made mention of the fact that it is the building blocks for any successful business. Thank you so much. At this point, we're going to launch another poll. We'll launch another poll shortly, and then we move on to the next speaker. Can we have the poll? Okay, the poll has been launched. We have about 30 seconds to answer. Kindly let's fill in our answers and remember to click submit. Thank you. I can see that some of us have started filling the poll. Let's keep it coming. We have about 9% of the participants who have answered to the poll. Let's keep our answers coming. Thank you to everyone that has participated. We have just 7 seconds left to close the poll. Please give in your answer and remember to click submit. Okay, I think we can end the poll right here. Thank you. So we have about 50% saying that to include and give opportunities to local companies would help. Thank you so much. I move on to the last but not the least speaker, Dr. Abraham Asongo. Dr. Asongo works in one of the microfinance banks who usually help entrepreneurs gain finance for their businesses. He's the business development clean energy project manager with Standard Microfinance Bank in Yola, Nigeria. He's also a clean energy consultant with Renewable Energy for All Nigerian, PRIFAN. Dr. Asongo has over 10 years experience in microfinance and community development projects. He holds a PhD in operations research. Join me as we welcome Dr. Abraham Asongo. Over to you. You're on mute. We can't hear you.
Thank you very much, Adejoke, and good afternoon to everyone. My name is Abraham, and I'm speaking on the overcoming financial barriers for renewable energy entrepreneurs. I work with Standard Microfinance Bank. Other speakers made my job very easy, so I'm just going to build on whatever they have said. Let's start. First, I would like us to, I'm talking about Standard Microfinance Bank because I observed that other speakers are there with the topic, then they go into who they are, but I'm going to break the protocol. We operate in Yola. Yola is in Northeast Nigeria. We are a microfinance bank. We have 30 years of experience in operations, and we have over 2,000 customer base. Basically, we offer various products and services. We do savings products. We do education finance. We do smallholder financing. We do renewable energy financing, which is the core topic of what we're talking about. We also do micro, small, and medium enterprise financing. And we have quite a good success stories in renewable energy, ranging from solar lamps. You can see those gentlemen and ladies there. This is what we do. We finance access to renewable energy products. We go up to solar farms. We do solar televisions. We do solar radios and all of that. We launched this product about 3 years ago. And as of today, we have cumulative unit of over 12,000, which we have financed, and total outreach by household of over 50,000. These are people that are living in remote areas. They have no access to national grid at all. Basically, how we achieve these numbers is we go down to the community where you won't talk about electricity. We engage them, creating awareness to let them know that there is a solution for giving them light rather than using other means that are injurious to health. So you can see the young man sitting in the middle there is actually our staff trying to create awareness to let this community know that there is something called solar, which can help them very well. Now, having said that, let's look at the problem we're talking about. What are the financial barriers for renewable energy business? Other speakers have really done justice to that topic. So I'm going to build on the foundation that they have already laid. Just like it has come over and over, the first problem or the first challenge or barrier is that lack of capital, which is a very difficult thing to grow and invest in any business, including renewable energy business, without a necessary capital in place. So the first is lack of capital, which is a challenge, it's a barrier. Then two, having sufficient capital is also one of the biggest challenge. And I can see some questions coming up, which they're asking, how will I get this? How will I get that? So I think we're going to proffer solution to that. Then lack of cash flow, like Krishna has talked about that extensively. So whether it's a renewable energy business or whether it's any other business you are doing, yes, cash is a king. I agree with him, because the success or failure of any business rests on your cash flow. When you don't have that sufficient, it actually measures the amount of money that come into your business and goes out. And it is the major, reliable measure indicator of the financial health of your business. So if you don't have enough cash flow, honestly, that business will not thrive. An inconsistent cash flow can wreak havoc on the business and is the number one reason why many businesses fail. Some will start up in the first year, second year, we discover that they're not there anymore. One of the problems we can see. And then insufficient marketing and advertising. When you miss your target market, that constitutes a serious challenge, because marketing researches the market to better create product services. You will know the target customer, because if we're operating in a place where they have reasonable electricity from the government, it will be very difficult for you to make an impact in your solar business. When you target areas where there is lack of that, and in our country, it's a very good place to do solar because you hardly have electricity for a whole day. So it's a good place. So when you locate the right place, and basically where we're operating are villages where it's very rare for you to see national grid in these places. So that makes a very good market, and demands are quite very huge. So now, having talked about the challenges, there are quite a lot of others, but because of time, we just mentioned 3 of them. Then now let's look at it the way other people are asking. How can I raise funds for my business? I think that's the key, because whether you are in this business for a long time, or whether you want to start now, or you are just coming in, the key component of the business is the fund. How will I raise funds? So I'm going to break it down, just discussing some of the points in detail, what other people have discussed. The first solution to financial barrier, I say you start with what you have. I know Krishna and others have mentioned that. Start with what you have, because sometimes if your business idea is so brilliant as you think it is, you have to stand for yourself and make personal sacrifice, because at the beginning, not everybody may quite understand with you what exactly you want to do. So you have to put in your money, start with what you have. No matter how little it is, you have to start from somewhere. Because the ideal, or maybe what people think is, I must have the whole money for myself before I start up. Then that is actually a wrong idea. So first, start with what you have. Then the second solution to the barrier of funding is you convert your social capital into financial capital. What do I mean by that? You have to meet your friends, your colleagues, your family members, your neighbors, and share the vision of what you are doing and the need for them to assist or invest in your business. And when that close contact becomes a financial contribution, that means you are converting your social capital into financial capital to make you progress. These are people who are socially or emotionally connected to you. And I believe that every one of us have quite a number of such people. So you can take advantage of that to build on your business. The third solution to financial barrier is raise money from investors, which other speakers have discussed on that. Because sometimes it's very hard to raise money from other sources like banks or investment firms for the first place, because your business have to run and there should be a justification before financial institution comes in. So these are individuals or group who invest their personal funds in businesses in the early stage of the journey. So if we're able to get across such, it makes funding available for your business. Then the fourth solution to the barrier we're talking about is you have to pitch a business competition. You know, there are a lot of organizations, and every year there are thousands of competitions coming from different organizations like C-Stars, like G-Prize, that provide strategic opportunity for entrepreneurs and business owners to raise funding to grow their business. So you have to enter that competition. It's free. You have nothing to pay for that. All you need is their innovative, impactful business plan and the ability to confidently convince and pitch your business on to the people that are investing. In fact, in 2019, we worked with Refund, that is Renewable Energy for Nigeria, and they were able to pitch such a competition and had a very good grant. Unfortunately, many entrepreneurs don't know how to find such competitions. But I think it's very easy. You can take note of the 2 that I've mentioned, and then you go on search. You'll find quite a number of them. The number 5 solution to the barrier we're talking about is to get advance funding from your customers. How does this work? There are NGOs and government entities that may want to give solar energy or renewable energy to a large number of customers. And these people, sometimes they are willing to give an advance funding to a vendor or a business owner. They do upfront payment. They will provide it, and it will serve as a source of capital for you to now render the service. And when that is done, it's actually a smart way and strategy of raising money, and it's often used by some of the world's most successful entrepreneurs and business. So if you get in touch with such, you will discover that you are doing business at zero capital, and you are making a good money, which is one of the solutions to that. Then number 6, you have to target government funds, grant, subsidies. Many people don't know this. There are several government schemes and initiatives, organizations that provide grants, provide subsidies and on low interest loans. The last speaker also mentioned that, and I know many of the participants will be taking advantage of that. These funds are typically used by government to stimulate and encourage entrepreneurship. So getting to know in your region and taking advantage, that gives you a boost. So you have to do more research. And when Chine was talking, she mentioned that one of the ways to getting knowledge and access to funding is for you to network, attend conferences, be on the lookout, because information is a key. When you don't have information on what is available or what to do to get funds, you will just get stuck in one place. And then number 7 is you will try crowdfunding, which again, Krishna spoke very well on that. Crowdfunding is a new revolutionary way of raising startup capital for a business or project. Let's imagine that you need about $50,000 for your renewable energy business. How crowdfunding works is there are 2 options. Either you approach a wealthy investor and tell him that, okay, you need $50,000 US, or you approach 50 different people, getting $1,000 from each. At the end of the day, you have $50,000. The concept of crowdfunding is built on the principle of democratizing the process of raising capital, and it works well when you are looking at the solutions of providing funding for your business. And then the last one, but not the least, you approach your bank. Remember, bank make money by lending. In summary, if a bank doesn't give out money, they can't make money instead. So you approach a bank. Most banks are typically conservative and they don't want to lose their money. So just like the last speaker said, you have to demonstrate the ability to make a profit from the money you are getting and then pay back, because it's not a free money. When you go for a loan, definitely you are required to pay back. So your ability to demonstrate that your business is viable, your business is scalable, your business can make profit to pay back the loan and also sustain, every bank will be willing to look into that. And when you learn how to do a business plan, a bankable business plan, it will be a startup for you to get funding from bank. So basically, these are the solutions. There are many others. And I hope that as you leverage on this, you'll be able to have enough funding for your business. I wish you good luck. And I'll be happy to see that most of us that are listening to this webinar are able to access grants, are able to access loans, and your business is thriving. Thank you very much.
Thank you very much, Dr. Abraham, for that presentation. And first and foremost, I would like to congratulate you for reaching 50,000 households in Yola. I think that's a good job, well done. And so for me, takeaway from your presentation, which I really like, is the idea of trying to participate in business competition. I think it's one of the things that I could highlight that none of the speakers are actually talked about, and which I believe that is something everyone should look out for rather. So for us to end this, we will also have our poll, so which will come up in a bit of a minute. Okay, so the question is, what do you think is the size of the global market for sustainable finance? Nice. So about almost 40% of us have actually participated in this poll. Please keep it coming. Please ensure that you click on submit. So we'll be rounding up the poll in some seconds. And we can actually round up the poll. Wow. Okay. So about 37% believe $700 billion should be the size of the global market for sustainable finance, while 24% think it's 65 billion. Thank you so much for participating in the poll. So we'll now move on to our panel discussion. And the first question for our panel. Okay, so as we asked in one of our polls, what, according to you, are the most important factors that influences investor decision to invest in renewable energy companies? And to answer, I will invite Krishna to answer first the question.
Thank you, Bernard. I think I already mentioned earlier in my discussion that a path to profitability and a path to cash flow. These are really, really critical factors for getting an investment from any investor, the debt or equity, or even a grant. So that for me is an absolutely critical point to be demonstrated by the entrepreneur. So that's a validation, or that's the journey that, or the strategy or the implementation of the business idea from an entrepreneur's end. You can have a great idea, but if you don't know how to execute it, then it's really difficult for an investor to decide to invest in that business, right? So it's a test for your execution, your clarity of thought, your implementation process, and all those things. So for me, a path to profitability and a path to cash flow. That's the critical part.
Thank you so much, Krishna. Path to profitability and path to cash flow. Yes. Thank you for the wonderful response. I would also like Dr. Ibrahim Asongo to please also respond to the question. So the question once again is, in one of our polls, we've said that what are the most important factors that influences investor decision to invest in renewable energy companies? Dr. Asongo, over to you.
Yeah, thank you very much. In addition to what Krishna have said, there are quite a lot of factors. The first one is the economic viability of your business, because an investor will want to see, or no investor will want to invest in a business that maybe after 1 month or 2 months, 3 months, that business fall up. So one of the factors that an investor will be looking for is how viable is this business? Will this business be able to be sustained? Will it be able to bring out the numbers and achieve the goals for which this investment is being done? Then number two, investor will look at the operational knowledge of the renewable energy business. That is the industry knowledge, whether you know exactly what you are doing, how will you be able to manage it, how will you be able to take that business forward. That is demonstrated in the proposal that you will put across to the investor from the beginning. So they will be looking at that. And also the availability of accurate data on your past performances. They will also be looking at it, because very often investors will be looking at, okay, how long have you been in business? What have been your achievement? What have been the outreach that you have before is also one of the key. And then for me, maybe for my institution, I'll be saying that also the proven reliability of the technology, because when we started this solar business, one of the things we did was to invite different solar providers. And you observe that there are a lot of fake products in the market. So if you are dealing with a particular product that people will often complain that this is not durable, this is not working, and then you are approach an investor, definitely that would be a negative mark for you, because investors are always looking for trusted products that they can invest and people will actually appreciate it. So very good product like those from Sun King are the one that people will be looking out to put their money in. Thank you very much.
Thank you very much, Abraham, for that contribution. Now we'll move to the second question that we have. The renewable energy industry, and in particular the off-grid industry, have seen a few hiccups since the global pandemic. Do you think it is hard to work on all the factors that Mr. Mitesh, Krishna, and Ibrahim mentioned here? What do you think companies need to focus on more while seeking investment? And I'm going to be inviting Chineye to please give a perspective to this. Do you think all of the factors that every speaker has mentioned today is really, really hard to work on? And what do you think companies need to focus on when they are seeking investment?
Thank you very much, Adejoke, for the question. Obviously, they are not easy. Those are not easy, but they are possible. I've been adhering to all those directives and then all those expectations, and then they have been successful. It's not easy, but I think that if you really want to thrive in this clean energy space, then you just need to adhere. And then one of the things too, I think we have all mentioned a lot of things that entrepreneurs need to do in order to be successful. And one of it, just by way of repetition, is doing your due diligence, your business due diligence. A lot comes into play there. And if you think that you don't have the capacity, please reach out to people that have the capacity to help you set up that structure, right? Your bookkeeping, your record. Nobody wants to throw away money, whether it's loan, whether it's grant, nobody wants to throw away money. So ensure that your business due diligence, your SOP is really well taken care of. And then just as I said, ignorance is more costly than not having capital. Network. You need to know that these opportunities exist. Then take advantage of them. But how do you even know that they exist when you don't even know how to find out that they exist? Network. You have a lot of players that are right here, right now. Reach out. Sun King is there, a very huge player in the space. You know, do your research. Do your research. Mr. Abraham just mentioned about fake products. There are a lot. And when you're an investor, your customers, nobody wants to lose significant investment to fake products. Do your research.
Oh, I think we lost Chineye there. I would invite Segun Adaju to please share his perspective on that. Thank you.
All right, thank you. Is she back? Okay, I think she's back.
Yes, he's back. We lost you for a moment.
Yes, I'm so sorry, but I'm almost done. So I was just saying, like, network to find out that these opportunities exist, and then do your research to find out products that are really certified, and get a mentor. Get a mentor. That can never be overemphasized, and that way, you will be able to learn from mistakes that people have made in the past, and then you are not able to repeat those mistakes. So you're able to present a bankable business plan. You're able to present a bankable feasibility studies and everything that Mr. Matesh and others they have really mentioned. Thank you very much.
Thank you very much, Chineye. Thank you so much. Dr. Adaju.
All right, thank you so much. Thank you, my friend Chineye. We do a lot of, we meet severally in several events. Yes, so I agree with you, what you've said about this. For me also, you know, in life, nothing comes easy, really. So you just have to go after it. Most successful people, successful entrepreneurs, they are driven, they push themselves to the limits. You know, takes hard work, takes commitment and dedication and focus. So you might look, oh, is it possible? Can I do all this? Can I meet all the, you know, I mean, what the man from SIMA, you know, talked about how to assess one. Also what Krishna also mentioned, right? But it's possible. and I'll share my own experience. I mean, I'm always a very determined person. I left banking when it was not fashionable to do so. And I went into microfinance. So Abraham, we are in the same territory. I mean, I was part of the early microfinance bankers in Nigeria when people thought it's not possible. Okay, and also I was one of the first pioneers of energy access. In fact, the first energy access challenge competition that was done in Nigeria was funded by UNDP with Bank of Industry. I put that thoughts together, right? And I find myself transitioning to this sector. I've done several proposals. For example, I've been financed by D-Price. I think, we talked about D-Price. I raised $25,000 from D-Price. I've done several proposals, crowdfunding, Kiva, and the rest. I also raised some grant funding from other organizations, UNDP, but you might write 20 proposals and only one will qualify to the next stage. That doesn't mean you should stop writing. Okay, so you keep writing, right? So it takes hard, commitment to get it done. It is possible. Right now, our company, we're closing a round of funding that will also take us to a stage where we are looking at a Series A. And we're very determined when we got in. After listening to the likes of Krishna and the rest, we understood that, look, you have to take one after the other. Your funding is first. You have to bootstrap. You have to develop your records. You have to keep records. We hired an accountant, external auditor, hired a lawyer. We ensure our books are in place, just getting ready. And then we agreed amongst ourselves that for the first 2-3 years, we will not take any money from anywhere. We will stretch ourselves to go look for our own money and then prepare our company for investors to come in. And this is exactly where we're about 5 years after we started business, where we've raised grant, several funding, we've raised debt from a commercial bank in Nigeria. But it takes that commitment. If we had lost focus when we were rejected the first 2, 3, 4, 5, 6, 7, 8, 9 applications, I mean, we won't be where we are today. So it is not, it might look not easy. I read a book and I'm close with this. And they said there are 3 things you can do. 3 areas where you can work and be very successful and make a lot of money. Number 1, something that is dirty that people don't want to do. Go and do it. Something that is dangerous that somebody doesn't want to do. Go and do it. And then there's one other D, I've forgotten that now. That if you're able to do these 3 things, people want to run away from them, things that are hard, but if you find yourself staying there, then you become, a success in that area. So I encourage people that, look, take that long list and go after it one by one. It is possible, and people have done it.
Thank you so much, Segun, for that insight. You said we should look for things that are dirty, things that are difficult, that people would normally run away from, and then we should run to them. And then that's where the money is. Thank you so much. I would like to ask our participants to share more questions if you have. Most of the questions have been answered during the session. I don't know if anybody has 1 or 2 questions before we round up. Thank you, Dr. Adajud. Things that are dirty, difficult, and dangerous. Yes. Yes. Okay. If there are no questions, okay, you can raise your hands if you have questions. Any question before we round up? Okay, we can only take a few questions. So let's go with Ugochukwu Ifediora. Ugochukwu, are you there? Yes, please go ahead.
Yeah, I hear you. All right, thank you so much for the seminar.
The network.
I had network issues. Can you hear me?
I can hear you now.
Can you hear me? But what I wanted to find out, is there a record for this webinar? Yeah, is there a record for this webinar, video record?
Yes, this question has been asked.
Go through after this session.
Yes, this question has been asked, and then we would be sharing the recording with all the participants. Okay, I see a question in the Q&A. It says, at what mile role as the solar system and the whole financing initiative has promoted employment to upcoming and existing generation? I don't know if Chinenye would like to answer that or any of our panelists. At what mile has the solar system, the whole financing initiative has promoted employment to upcoming and existing generation?
I really saw the question, but I'm trying to understand what that question means. What does that mean by at what mile? Is it to what extent or what? Okay, but if it's to what extent, I can attempt from that angle if I get you right. So just as I said, we have been able to support about 3,000 women entrepreneurs to build clean energy enterprises. So that's in Nigeria alone. So if we're talking about, if we're like aggregating all the Solar Sister has done, it's over 6,000 women has been empowered. And then one thing is some of our entrepreneurs have also scaled, and then they've been able to employ more people working for them. So it has really created a lot of economic opportunity for both the women and then the people that they are employing. Thank you.
Thank you, Chinenye, for that response. And that's huge. I think we should take the last question from Akini Obaide, and then we can round up. Akini Obaide, are you there? You can unmute yourself to speak.
Okay. Hello. Am
Yes,
I
we
on?
Yes, we can hear you.
My question is, I am so much interested in this space. I remember I was talking with Dr. Adaju in Akure about a week ago. I wanted to find out, in trying to get into this space, the most important part is the electrical part. I mean, the electrical or the technical aspect of getting to combine renewable energy to power. Is there a place where we can get to learn this within this space? Thank you.
Thank you. I would allow Segun answer your question.
Okay, thank you. If I got that right, the technical aspects of the business, right? Sorry, I was trying to take some notes, and maybe you can just repeat the question again. Apologies.
Okay. Dr. Adaju, my name is actually Obaide. The question is.
Good afternoon, sir.
Good afternoon. I wanted to find out.
Yes.
The possibility of getting to understand the technical aspect. I remember I was discussing with you in Abuja about some of the opportunities and all the other new things that might come into this space. And I wanted to, because it's been an area of interest, and I want to get into this space. And I want to find out, is there a place where we can learn to prepare for the technical aspect before we launch?
Okay, yes. Thank you so much, sir. It's nice to see you again. I mean, we went in last time was in Akure. Yes, there are several platforms to be trained. And you can be trained into understanding the technical aspect of this business, even if you are not, at the first instance, an engineer. So I'm a banker, I'm an economist, okay? So you can imagine, an economist also operating in this sector. When I wanted to get into this space, I took my time to find out which training programs can I go for that I will understand. So I attended both local and foreign training. For example, I was in Renewable Academy in Berlin for about 2-3 weeks, just to go and understand this sector. I know I attended some training by Arena, but locally, I also did some training. There are some organizations that do training. There are about 14 training centers that are set up, are supported by GIZ, okay, to do technical training, solar installation. They call it SPIV training programs. There's one in Kaduna, for example, Blue Camel. There's one in Lagos, for example, A. Stevens. I mean, there's Rubitech Solar. There are several of them cut across the whole of Nigeria where you can get trained on the technical aspect of it, right from installation to mini grid to even major projects. So what I did was to identify those organizations and go and do the training. So beyond the technical training, I also went for the business side of training. I mean, I've spent, most of my time just attending conferences, programs, just like Chineye mentioned, network. Every year I used to go to Abu Dhabi, the World Future Energy Summit. That was where I think myself and Blue Camel, we do that regularly. And then finally, find mentors, because beyond the technical training, mentors also very important. So my mentors were Sulaiman Yusuf of Blue Camel, Dr. Akpoyebo of A. Stephen. Interestingly, they have been in the space, and I was just coming in. So I felt I just have to understand what the sector is all about. So yes, there are several organizations in Nigeria where training programs are held. For example, I think Lagos Energy Academy is also trying to, I think they even have a training program also. GIZ, many platforms. Maybe we can connect and I can share some long lists with you, and then you can choose where to get trained. Thank you.
Thank you so much, Segun, for that. I hope that answers your question. Unfortunately, we will not be able to take more questions because we are way ahead of time. If you have more questions, kindly send your questions via email to the email on the screen, global.partnerships@greenlightplanet.com, global.partnerships@greenlightplanet.com. I'm going to hand over to my co-host, Bernard.
Thank you very much, Adejoke. Thank you for everyone for attending today's webinar with the title, Overcoming Financial Barriers for Renewable Energy Entrepreneurs. So as Adejoke said, if you have any other question, please write to us. And definitely you will receive a follow-up email within 24 to 48 hours with a link to view a recording of today's webinar. On behalf of Greenlight Planet and our presenters, we thank you for joining us today, and please have a great rest for the day. Thank you, everyone, and God bless.
Thank you, everyone.
Thank you, everyone.
Thank you, and bye-bye.